Hello traders. In today's video, we are going to be talking about the box method, which is a pretty quick method you can use to determine really good support and resistance points. If you want to learn more about this kind of strategy, I recommend you go check out my trader course, which I'm going to link in the description below. All right, traders. So what we're going to be looking at today is a few different cryptos and a few different patterns that I want to show you guys. This is going to be pretty simple, just based on open interest, volume, and price, nothing else, nothing more. So what I'm going to look for is, let's first identify a range, or at least a period of more compressed volatility. And within that range, we want to look for an increase in open interest. So an example of that would be here, where open interest, aggregated open interest went from about 1.3 bill to about 1.4, so about a $100 million increase. So right here, we know that this entire range is likely to contain a fair amount of trap traders no matter where price goes. So if price falls, it's going to be a bit tougher for price to go back to here. And if price rises, it's going to be a little bit tougher for price to go below here, right? All right, so let's look at another one. So we can see here, this range is even prettier. What I mean by that is we have a pretty substantial open interest increase beginning here. And I'm getting that from right here, guys. And with that, we know that this range, likely contains a fair amount of open interest as well around here. So we know that these two ranges probably contain a fair amount of trapped short traders. I also know that because OI has been increasing and not decreasing, so more people are still entering, basically, is what I'm saying. And then we finally get like a little bit more of an increase of open interest here, so this could be resistance, but watch what happens here to these two ranges. So if you caught that, look at that. Price is unable to go lower than this box range. And what I would recommend, typically, if you want just a really quick method for using this kind of box strategy, whenever you get one touch of an area, I just delete it. Because the reason I do that is we know that for open interest decreased and price went here, meaning that some of these trap traders probably got out of their positions. So this level to me doesn't really seem as important. I mean, it could be a double bottom, but right now it just doesn't seem as important. And that's kind of the crux of this strategy, which is looking for tight ranges like, here, then looking for large increases in open interest. Let me get that right there. Large increases in open interest. And then once you see that, you mark the range and you know it's probably going to act as resistance or support. So here is another example. Yep, and right there. You can see what ended up happening here is, again, pretty similar. Price goes up to here. It doesn't go any higher. If anything, open interest increases here. But what ends up happening is we know that we have some probably trap longs here. Now, when I use the word trap longs and trap shorts, I know some of you might be a little bit confused about how I'm coming to that basis. Well, when open interest increases, we know that both longs and shorts are increasing or adding to their positions or opening positions. That's a fact of how derivative markets work. Now, if the price were to, let's say, like what it did here on Ethereum, just falls 5%, what do we know about those two sides who took a lot of positions here? Well, I know that the shorts are doing quite well, and the shorts might be inclined to take profit, but we know that the longs are not probably feeling too good here, and that a fair amount of the longs are probably still in their trapped positions. I say that because open interest doesn't really decrease that much. So we know because of that fact by itself, that this area might be, a decent amount of resistance. So it's touched once, which kind of, to me, seems like I'm going to delete the level. And you might say, well, how do you trade this? Well, if I wanted to trade this, just super simple, you could trade trap trader to trap trader. That kind of strategy would basically just be doing something like this. We knew that there were a fair amount of trap traders here, buying here. I know this is 2020 hindsight, but, a strategy is a strategy. That's probably not a great way to say it, but this is just something that's been working for me, and that's why I want to show it to you guys. And then what we can see here is, like, let's say we buy here, and we get that perfect fill, that like 1 in 10 fill, 1 in 20, chance of a fill. And then we see that there's actually a decent amount of resistance here. And then we see the price begin to go up, a decent amount of resistance because we have that increase in OI. We know there's some trap longs, and then you begin to exit or think about exiting around here because you see the trap traders here. Now that kind of trade would be pretty nice. Okay. All right, so let's keep an eye, on this range here. So what ended up happening? So price dumps, price dumps, but it actually doesn't go that low per se. We have high volatility, but the price just can't really go much farther than this. And the reason why that's quite important is, if you remember here, we actually had a pretty sizable increase in open interest. From this point to this point before OI decreased, we have about $133 million worth of new positions opening, which is a 10% OI increase. So there's a lot of people trapped here. So because of that, layering in bids here, maybe potentially, you short here and you put in bids as take profit here, or more aggressive, you put in bids here to open a long, that would have worked well. And you can see that point was touched. Now, okay, let me delete this. Now, what we can see is that the price is likely to probably rise. Yeah, price does rise here. But let's continue to look at these kind of increases in open interest and find these boxed ranges of trap traders. And I wouldn't even just recommend, I would say it's a necessity for you guys to draw these. Do not just have them in your head, draw them. Do not, trust me, it means so much more when you draw these kinds of zones than when you don't. It just means a lot more, trust me. First-hand experience in that. So we know that this point is decent resistance, potentially. And it doesn't really look like there's too many trap zones lower, and you can see right there, look at that. So it looks like we actually do get the first touch of this. Yeah, so then this point is probably invalidated, but it would have been decent, as you can see here, to probably put some offers, because you could have filled here and gone down there. And then we get this, which is really, I'm glad I'm finally seeing this, because this is more of what I was looking for sure. Yeah, let's label these. So we have a decent increase in open interest here for sure. This isn't really a range, so it's kind of hard for me to mark, but it is a pretty sizable increase in OI. We also have an increase in open interest in this range, so that's another mark zone. Pardon me. We have a decent increase in open interest here as well. Basically, this entire range, we're just getting increase in open interest after increase in open interest. And you can kind of see how those play out. The first one here, oops, sorry. The first one here is touched and we get a bit of support there, and then price goes right back up. And then the second one is touched and then price goes back up. And I'll bet you that this zone isn't going to be easy for price to just dump past. I'll bet you that this could be potential future support if price ever does go down there, or even this area down here if we think that there are still a lot of trap shorts here. So I'm actually going to leave that range. Yep, and right there. So yep, right there, that would have been another good buying point. Putting in bids here at this trap range just would have worked, but here it would have been more short term. And here we have the point that I cared the most about. This massive increase in OI in this kind of tight range, where I know that there's a fair amount of trap guys. Look at that. It's like almost a perfect support right there. Literally like a perfect support. And the way you can find these zones is by identifying, where traders are trapped. And I would say, these are not zones that work as bottoms or tops, permanent bottoms, not permanent, but longer term. For me, these just work as more bounce off points, if that makes sense. So if I see a decent support here, typically I'd be looking for more of a short-term trade, if that makes sense. So yeah, we can see here, let's go to the present so I can actually, oh, perfect. All right, and we have Ethereum here. And yeah, and you guys can check if I'm right on this one, because I don't know what's going to happen in the future, but what I can tell you is that I see a sizable OI increase, and let's go start detailing where those open interest increases occur. So we have a fair amount here, but I don't really care about that point as much. Yeah, I'd say that the most, there's a lot going on here, actually. Ethereum's really, that's an all-time high, by the way. If it hits here, it's an all-time high. So that could cause some liquidations and some stop losses being hit. And Bitcoin is currently at about $36,000, or almost 36,000. Yeah, you know what? I'm going to mark this point. This tiny tight range had some OI increase, but the thing is that, kind of played out here as resistance became support. But I would say that the largest amount of open interest increase happened here. Again, yeah, right there. And that point actually did become, that resistance did become support. But I would say that is going to be probably decent support. That could be decent support, even though it already did have one touch. And you know what? I'll just mark this level as well. We have an open interest increase here, and what you're going to notice is every time you have these open interest increases at market tops, they become support. This resistance became support. This resistance became support. This resistance became potential support. And if you might say, well, how do we find potential resistance turn support? Well, typically a sign is when you get a pretty large open interest increase. You know, that's typically not a terrible sign. However, I will say there is one thing that kind of invalidates this slightly, and that's that each time we have a large open interest increase here, it doesn't seem like much resistance was formed, you know, during this uptrend. And what I mean by that is, like, if we have the 1400 around here, price did not have a hard time going past that. And the reason for that is just that this is a strong uptrend. So what I mean by that is when you're looking at these trap trader zones, when you're doing this box method, you never know, but you have to have a bullish, bearish, or neutral bias. Do you think that the market's trending up, trending down? Do you think that the market's just ranging? Because that bias is going to dictate where you're probably going to put your limit orders. Because if you always assume a range, then that could be very problematic. So right now, clearly this is an uptrend until proven otherwise. So for me, you know, I don't think it would be a great idea to try to look for a massive increase in OI like here and then try to sell. I just don't think that'd be great. Okay, so let's go to SOL. Funny acronym. So this is a point I want to show you guys because this is one of the most extreme open interest increases I've ever seen in my life on a pretty major cryptocurrency. What you'll see here is this is on the hourly, and in a few days we triple in open interest. So that means that the amount of present positions have tripled. A lot of people on this one. So let's go look at really where this is all happening. Well, the OI increase begins to really take off, I would say around here-ish. And it really, yeah, so like this whole range right here, I know this is a big range, but this whole range is basically just pretty sizable. I'd say down here, not many people really entering. So I would actually say like around here is a good range. And what you'll notice is that, look how hard it was for price to go below. This point, I think, is probably the most interesting that I could find in the entire video, because what you'll see is there's a pretty large open interest increase right here. I mean, we triple from 10 mil to 30 mil. That's insane. And you can see price just can't go past this box zone. And the reason for that is probably due to those trap traders trap shorts who keep buying it back up. And then a little bit more advanced, but I talk about this in the LRA guide. Another reason why price can have a harder time going past a large point of increased open interest is that if there are profitable longs let's say there's longs and shorts who entered that blue zone, right? So there's a lot of profitable longs who are, let's say, happy to sell only when they're in profit. What that means is that they're probably going to stop selling at the point where price reaches that zone, which means that the amount of potential sellers goes down when price hits that trap trader zone. And the amount of potential buyers goes up when price hits that trap trader zone, because the shorts who want to exit at break even. So that kind of fusion of not many people wanting to sell longs, and a lot of people wanting to buy shorts, that fusion creates a pretty good zone of demand. And that's why price has a hard time going past it, and price has an easier time increasing in value, increasing in price. So that is definitely another good point, but now I know what you guys all probably want, which is, you know, everyone's favorite coin, at least my favorite coin. It's my YouTube name, BTC. So if we look at Bitcoin here, okay, why is it being ugly? If we look at Bitcoin here and look at prominent trap trader zones, I want to be a little bit more, I want to have tighter ranges. I don't want to just like mark up the entire thing, because that's not really that helpful for setting good limit orders, right? But what I do see is that this range is very important. I say that because we go from about $3.85 billion to about $4.4 billion. So this is pretty important. Now this range of open interest, this kind of zone is right here. So I know that price might have a hard time going past here. We have a lot of people who bought here, a lot of people who transacted here, and a lot of people who bought, you know, and look at that. I mean, price tries to go past it, but what you'll end up seeing is price immediately gets rejected. Probably a pretty good reason why it immediately got rejected is all the people who bought here are now potential sellers because they're in profit, they rush over one another to sell. So what would be the big brain play here? Well, the big brain play would be, I mean, 2020 hindsight again, but let's say that you had bought down here because you noticed trap shorts, then you put limit sells just all in this range and they get filled here. I mean, that would have been like perfect. 23% or something. And if you do it at spot, you know, then you don't have to worry about liquidation or margin calls. So you can kind of hold that position forever because it's, you know, spot trading. Yeah, I think that that's definitely a very important zone. Let me delete that. Okay, the delete button is not working. But beyond that, it's kind of hard for me to identify some pretty good zones on Bitcoin. I mean, right here, we do have a lot of people entering though, which is kind of worrying because it means that we might have a lot of potential sellers up here, a lot of trapped traders. But basically, to put this method into words more than just kind of visuals that I'm showing you, what I do is I look at aggregated open interest. And what I'm interested in finding is two things, pun not intended. I want to see sizable open interest increases in tight price ranges or in zones of consolidation. Because what I know is that price tends to consolidate and then trend, and typically price traps a lot of the people who were originally in that consolidation zone, which can make it harder for price to go back to that consolidation zone and like burst through it. Not always, because, you know, markets are probability, markets are not certainty, and they actually are like never going to be certain to do one thing or another. But a pattern that I've noticed is if you do this kind of method, you're taking advantage of other traders, you're taking advantage of other people being trapped, and in the long run, I think that that's a better idea to do so rather than not. And that's why I took the time to create the trader course, because I thought that this was quite important. And I thought that, you know, I still think that taking advantage of a lot of traders who buy tops and sell bottoms is probably one of the best ways to make money in this market. Or at least that's my opinion. Yeah, and I mean, you can see plenty of just, oh, this is a beauty of a trap zone. This is just like really nice. Look at that. We have a massive increase in open interest. And that's a few $100 million right there. 300 mil transacted rate, not transacted, but increase of positions about $300 million here at around right there. And I know that on the hourly, we already marked this zone, but on the 5 minute, we can get more pinpoint. And we know that that 38K level was just almost, you know, near guaranteed to become resistance because there's just, you know, there's so, when there's $300 million worth of people entering right there into longs, I mean, you kind of at that point know that it might be a little bit tougher for price to just go to $48,000 and just chill there because a lot of those longs are probably going to want to sell, making them potential sellers. So that's going to be it for this video. If this did help you, you can shoot me a private message or you can pick up the course to learn more about kind of identifying trap trader zones through the kind of box method. Final recommendation, or, you know, not recommendation as I said before, but definitely draw these. Don't just try to like imagine them, but draw them and see how they play out. Even better yet, if you want bonus points, go back in time. Don't look at what happens in the future and mark up certain zones and see how they act, you know, and try your best to remove 2020 hindsight. It's gonna be hard, but try to just randomly scroll back and then try to see how these zones play out. And if it works for you, awesome. And happy trading.